Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick on the show today. We've got earnings, we've got movers, Nike moving after hours, VMware is taking off this morning after news of a potential very complicated deal with Dell. We'll talk about the VMware Dell thing a little bit. Talk about Nike. Tesla had that move yesterday. Maybe we'll talk about that. Two guests for you today. First up at 8:15, we got a new guest. His name is Bill Baruch. He is president of Blue Line Futures. And then at 8:35, we are going to be joined by the Reverend Emmanuel Lemelson of the Lantern Foundation and Lemelson Capital Management. Joel, tell us how we're doing this morning in the S&Ps.
As usual, trading in the green by 9 1/4 at 28.50. Your pre-market low was right at the double close area. It was actually a triple close area. We should have done a 6 p.m. show because there was a great level there. Good swing area. You opened at 42 1/4, 41 1/4 tick, straight up. 52 1/4 is your pre-market high. Big numbers to look up above. Thursday's high, your Globex high, 53.75. Your all-time high, 55 1/4. And above that, let's just call 2,900 our resistance. You have crude taking a little bit of a break here from its notorious rally 2 days ago, trading in the green by 8 cents at 65.58. Let's take a look at the daily here, and we can see that we had the breakout and then the fallback, and let's see if that old support, old resistance stands as new support. Then moving on to gold, lost a little bit of its glitter yesterday, down 12.90, trading at 13.50. Silver in the red by 22.5 cents at 17.39.5. Bitcoin, some problems with the Japanese exchanges, losing its luster, down 5% at 10,723. Just like there's psych levels in stocks, 10,000, that's the psych level in Bitcoin. Dennis, what is on the radar here? Let's start with after hours, some good action.
Yeah, we had some earnings reports, obviously, from last night. Maybe we'll jump in through the earnings reports here, then we can jump into, or do you want to go to the big mover of the day, which is DVMT and VMware? You pick. Want to get the DVMT, VMware stuff out of the way?
Because it's something we did some homework on.
We'll get all complicated here at 8:03 in the morning for you guys.
Sure, let's do it.
Okay. So you might be reading the headlines, and you can see a bunch of headlines coming from Dell this morning, and Dell might consider an IPO, and you might be questioning, well, Dell is already public. It's Dell Technologies. It's DVMT. But that is not actually the case. Dell Technologies is actually just a tracking stock, pretty much, for VMware. And there's also a headline that Dell is considering buying the rest of VMware that they don't already own. So they own a huge chunk of VMware. When they merged with EMC, EMC owned a huge chunk of VMware, and that's why Dell owns a huge chunk of VMware. DVMT is their tracking stock for the amount of VMware that they own, if that's not confusing enough. But what you need to know is basically the DVMT just tracks VMware. So when VMware goes up 8%, typically DVMT goes up 8%. So if you look this morning and say, well, I don't even see a headline on VMware, it doesn't matter because DVMT is trading up. And well, there is a headline, obviously, but DVMT is just tracking VMware. So they're considering bringing the rest of the company public, which they took private back, I believe. What year was that, Joel?
Was it like 12 or no, it was a little bit later. I think we were in this new office. Was it 13 or 14?
I think so. Because I own shares, and I've complained about this on the show before. You guys are like my sounding board, but I own shares of Dell, the original Dell. And this is very confusing for 8:04 in the morning. And obviously they took it private. And this was back when the stock was 13. I didn't want to sell. I think Carl Icahn, like you were saying, Joe, was fighting that deal. He didn't want to sell down there. It was, shortly after the financial crisis. The price was really low. I thought it was going to come back. I didn't think Dell was in the gutter, but when they take it private, you're done. They take the shares away from you, and that's it. I did get a little bit of DVMT, which the tracking stock is, but not nearly enough. Most of it I got back in cash. And that's disappointing because now they're talking about bringing the rest of it back public. So they took it private for 4 years, screwed me basically as a shareholder because I had to sell really low. And now they want me to come in here and buy high. So I'm not pleased at all with this headline. Not that, and obviously there's multiple headlines. The headline about Dell bringing the rest of the company public, but also them buying the rest of VMware. So from a trading perspective, that's why VMware is trading up, because Dell is considering buying the rest of it they don't already own. That's why DVMT is trading up, because it tracks Dell, or it tracks VMware. And then just on the side note, they're considering bringing the rest of Dell back public.
Boy,
confusing.
Yes,
at 8:04 in the morning.
It's very confusing. Spencer, did you drop that article in there that we did on this last summer?
Yeah,
Mr. Dugan. Basically, shareholders got fleeced on this one.
I think they did, really. And you can take anything private, and if you're Michael Dell, you must have been saying, well, it's ridiculous on my stock price is $11, so I'm taking the company private. I'll give you a little premium 13, and that's it. But it was after the financial crisis. Everything got beat up after the financial crisis. And some of the companies, I guess Michael Dell was smart. He probably made a lot of money by taking the company private. Now he's going to get back public now. So big money for him. It was a smart move. And there's nothing you can do as a shareholder. When they take your shares, they take your shares.
I mean, I wish we could figure out, because you got the EMC in there, just figure out like the market cap or even his net wealth, or maybe we'll try and get him on the show to see if he could explain this.
Bring Michael Dell out.
Could you get him, Brent, could you call Michael Dell,
hey,
get him on?
Why'd you make me sell my stock at $13 and then, you want me to rebuy it here probably at a ridiculous price, and we don't know what that is because we don't know all the details, but buy low, sell high was Michael Dell, and he forced shareholders to sell low, and now he's trying to force them to buy
Let's just
high.
give pre-market levels here. I mean, that's all. VMware, this stock has been a monster. You got a pre-market high.
It is.
152.51. You backed off to 147.75. Always a nice psych number like 150. 15-minute chart gives you a double top here at 149. So there's a couple intermediate levels. I think this thing, and I know I mentioned Sean a lot on the show, but I think he just thought when this thing was at $50, when was this? $50 down here. I remember him just saying people are stupid, but there's a tripler. Let's look at DVMT. That's the tracking stock for Dell. Let's go to the
perfect chart on top of it.
Yeah. Oh, yeah. Perfect overlay here. Let's go to your 15-minute chart, pre-market action. You got a spike up in this. Nice double top, nice round number. 96 even. That's where sellers are congregating this morning in those two issues. But nice windfalls, and we'll have to see. I don't understand all the components of the deal.
When there's a little bit of differentiation in the price, there's been a pretty good opportunity. I think these are two of my better stocks for the last few years, trading very consistently on them when the prices deviate from each other. So I hope they keep them still public, but it sounds like they might not be. So I have to find something else.
$13, Dennis. I remember they had to send a courier to your house to get those shares from you.
I didn't want to sell. I was ticked off. I did not want to sell my shares of Dell back when they took it. Was it $13 they gave me? Is that what it was? I don't remember now. Is that what it says in your article?
Yeah, I don't know if it says in the article, but Spinner mentioned that. So let's move on. For
$13. Now I'm starting the day in a miserable mood just because Dell's going to come public all of a sudden. I would owned it still. Okay, let's move on to the earnings. We got 6 minutes here. Spencer, we're going to let you take the lead here. We got Intel, Starbucks, Honeywell, AbbVie, E-Trade, Financial, Western Digital, wild last night. Which one do you want?
All right, let's start with Starbucks. Starbucks Q1 adjusted EPS was 65 cents versus a 57-cent estimate. Sales of $6 billion versus a $6.18 billion estimate. Comps are up 2%. China comps up 6%. Seems like all good numbers to me.
Okay report, but let's just go and dig into a little more details there too and look at the charts. And And you said it yesterday when you were on the TDA show there, Joel. When stocks have run up into the reports, a lot of them have been selling off. Now, this has not had a huge run up, but Starbucks, again, lower beta stock, doesn't move a lot. So it is significant. From November 54 to 60 is a significant run up for Starbucks, because this is a stock that typically doesn't move much at all. I mean, go out to the monthlies and you can see the stock has been in a range between basically $50 and $60 for the last 2 years. Kind of what other stock was in a range between $50 and say, oh, you know what it was? Nike.
Yeah.
Nike was in that range, the same range for the last couple of years. It's finally breaking out to the upside. Not that they have anything to do with each other, but it's funny how you get a 2-year consolidation almost in the same pricing. It just reminds me of the Nike stock, because it did the same thing, priced between 50 and 60 for 2 years as well. So we're still in that trading range. So hard to get bearish here, but what are your thoughts this morning on the earnings report?
Boy, oh boy. Nice move here. Running into the earnings, put in a double top at 62. Sellers galore here. Let's take a look at the 15-minute chart. And you had a spike low in Starbucks down to 57.01, getting a little.
When was that?
That was right off the print. Right at 18, right at 6 o'clock, Dennis. You might have been away from your computer. 57.01, you got to pop over 58. Now just muddling in the middle 57 handle. I'll need to go to my daily charts to see if we got any kind of confirmation here. Not a lot in here. You did have a nice series of lows, though, right here. 57.05, 57, 12, 18, 30, and 42. So there is some lower support here in the, there is support in the lower 57 handle. If not, you got an ugly candle, takes you into the lower 56s. But that's a big drop considering you're at 62 a few days ago. You're short in the report. Let's see if find buyers in the same area as you did at the end of 2017.
I think there's underneath demand in here. You get down in the mid 50s. I just think there's people who want to buy stocks and they want to buy Starbucks. So I don't think if I own this, I don't think I'd be selling it down here 3 points this morning. And I actually might be buying pullbacks on this too. Nice little double bottom. Not that I don't think it's going to get that low, but that 56 area. I'm just looking from the November 27th, November 28th. Actually, the price is 55.91, 55.75. Just rounding it, calling it 56. That'd be a nice level, but not sure we're going to get there. And then, there was that support of 57.05 as well, which is the low of the move back in December. So there is also GS is taking it off the conviction list here this morning. That just came out about a half an hour ago. That's why I think you had another little whoosh down there too. They removed it from the conviction list. It still remains buy though.
They're going absolutely crazy in my area. They had one
Starbucks.
Yeah, I think they have 4 within 2 miles of my house.
They're on top of each other. I always joke about the Simpsons.
And I think
I always joke about that Simpsons episode where, so Homer's in the mall and he's in the one store, and then they say to Homer, you got to buy your thing because we're closing this shop up and we're turning it into a Starbucks. And then he steps out of the mall and he's walking through the mall and every single store in the mall is a Starbucks. There's in Toronto. There's one corner there. I forget where it is. If anybody's from Toronto, they could let me know. But there's one corner that has 3 Starbucks on the same corner. So almost 4, like literally 1, 2, 3 Starbucks on, of the 4 corners, 3 corners have a Starbucks. It's crazy.
All right, let's do Intel, and then we'll go to our first guest.
Big move.
All right, Intel earnings. Let me get those numbers for you real fast. There we go. On the Pro Q4 adjusted EPS $1.08 versus 87-cent estimate. Sales of 17.1 versus 16.34 billion. So good numbers for Q4. Q1 guidance, EPS coming in line, sales coming in line, fiscal year EPS coming in higher, and GAAP sales coming in higher as well.
It started popping. I tried to short it a couple times, and I finally threw in the towel. I'm like, this thing is just too strong. And, how do you know when you want to throw in the towel? When shorts aren't working. I tried to short it in the 47 handle. That wasn't working. It got up there in the 47.5. I tried to, and now that wasn't working. And now we're at 48.15. It's a huge move for Intel. Do I think it's warranted? I don't know. I guess it's been a laggard for so many years. It's just still playing catch up. I mean, where is the all-time high in Intel? Let's consider this, because Intel, during the tech bubble, got up to what, like $80 or something?
You always say 80, but it wasn't. It was $75.69.
$75. So here you are. What year was that?
That was in September of 2000.
So here we are 8 18 years later, and the stock is still 30 points below its tech bubble high. You think, wow, Intel's been such a great stock. Not if you bought it in the year 2000. And there's a lot of stocks that are like that still. I mean, Cisco, there's a lot that are still 40, 50% below their highs. That's how crazy that bubble was back then. You know, Intel probably trading with a P of 90 back then. And now it's got a P of probably like 10 or 12. So it's playing catch up. It's trying to play catch up. So if you think, you know, it's a huge move, where can it go? Well, it's still got a lot of gas. And I think eventually it's going to see $50. I don't think today, but I think it's going to see $50.
Chip problem? They have a chip problem?
That's what this stitch, Joel. When you get these problems in these tech stocks, you buy them on the pullbacks because they come back roaring.
Yeah, and your pre-market high is exactly where we're trading at now, 48.17. That takes out the former high of the move. Tricky Nick Shaheen just popped in the chat here, and he throwed us a chart, and he's saying this is a breakout on the monthly here, so don't stand in the way. You see that red arrow going up? Nick's pointing to $52.
Can we show Nick's chart?
I did. I just put it up there. Yeah.
Oh, just the
No, I didn't. Oh, because I haven't got the new screen share yet.
Okay, somebody else show Nick's chart so we can show.
Well,
Nick,
it's
up early.
It's up.
It's 8:16. We're going to a break. I'm gonna grab our guest, Bill Baruch, President, Blue Line Futures. We'll be right back with Bill. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick. We're on the line with Bill Baruch, President of Blue Line Futures. Bill, how's it going today?
It's going well. How about yourself?
It's going well. So, Bill, you're a new guest. We haven't had you on the show before. Tell us a little bit about your background in the markets.
Well, I am the president and founder of Blue Line Futures. We're a futures and commodities brokerage firm here at the Chicago Board of Trade. We work with clients everywhere from novice to institutions and family offices. We have a lot of flexibility with commission rates, what we want to put in effort-wise with clients, what they want out of us. And we devise plans on working with clients, trading strategies for clients. And ultimately, too, our research allows clients to trade on a self-directed basis, but also have our research. I've been in the industry for more than 10 years, started at Lynn Waldock and MF Global and ran a trade desk there. And I love commodities. I love the day-to-day volatility and the opportunities that it presents.
So tell us a little bit about your style of how you actually approach the markets, and like what are you doing in the morning, and how do you look at the markets?
Well, first thing I do every morning is we put out our Morning Express research. It covers gold, crude oil, natural gas, the S&P, and the 10-year note. And really, it's ultimately my trading journal. And I get the fundamentals, the technicals, proprietary levels, our bias. I get all that out there. It's roughly ends up being about 4 pages or so. Wake up early every morning, start studying the markets, where things were overnight, and start writing that. And I get that out to clients at about 7 a.m. Ultimately, it helps them plan their day and what we're expecting in the market. But at the same time, it helps me plan my day. And it's my journal. So that's how I start my day each day, and getting all my thoughts and ideas and a game plan on how I'm going to attack the day. I think that's most important.
All right, let's start with the name of your firm, Blue Line Futures. And I'm just going to hazard a guess here. Is that one of the trains in Chicago?
It is. Blue Line is a train in Chicago, so it's a little bit of a play off of that. And I thought that it's catchy, but it's a play off Chicago. Give some hometown credit.
Okay, all right. Were you ever on the floor in any of the exchanges?
I wasn't. I started at Lynn Waldock, which became MF Global.
Yep.
Just everything started to become off the floor in electronics. So I personally was never on the floor, though in doing a lot of TV and media, I go down there and visit people from time to time. So it's nice being at the Board of Trade and spending the time here and able to kind of go get your ear to the ground down there and what they're looking at.
All right. So I'm looking at like your services and stuff, and you kind of like to provide support to your customers technologically, but you seem to have a grasp on the global market. So let's talk. Do you have a lot of active traders in the pre-market after hours sessions? Are you providing support to them? And does that differentiate you from other brokerage firms?
Well, as a smaller boutique firm, compared to some of the larger firms, we can have more of a hands-on approach. Where we put out in the morning, I get out the Morning Express. We also have a grain side that goes out too. And in the evenings, we get out FX. FX can see a little more volatility. So we do set our clients up with looking at what support and resistance levels are going to be in the FX overnight. But these are 24-hour markets with only a close between 4 p.m. and 5 p.m. Central Time. So there's a lot of activity in the overnight or opportunities that could present themselves. So, working with somebody that's always watching this, that's elbows deep themselves, you kind of want to set up where those support and resistance levels going to be overnight, or in a day like yesterday, where you get tremendous volatility at the end of the day because some comments. It's going to set up for a very interesting overnight session, and having some analysis and having somebody to lean on is what we provide our clients with.
Let's just talk about different platforms. Do you support, I'm a TradeStation user and a Thinkorswim user. Are there any, strategies or analysis techniques that you have to specific platforms, or you derive the numbers from your own technical analysis and then have people apply them whatever, way they seem fit?
Well, right now I have a proprietary way that I look at things, and I get my support and resistance levels out after kind of looking at the charts on my own. I use some charting I use a couple of different charting programs, CQG, as well as the Blue Line Trader. And our clients have the ability to really access any or most platforms they want to use. We also, with that Blue Line Trader and the Blue Line Bullet, give clients the ability to have a cheap platform. Both of those are relatively cheap. The Blue Line Trader is free, and you have the ability to do a lot of things with that. Everything from the option side and building some option spreads to you can build in back end algos and work with that, which is also something that clients find useful.
Bill, a question here from our chat. Actually, we've got a few questions from our chat. First one, do you have a target on natural gas?
Right now, that's a very good question. Earlier in the week, we saw a rip your face off natural gas rally. I mean, this was something that we haven't seen in a little while, but the February contract going off today, or the options expiration is going off today. All the volume, open interest in the March. I have major 3-star resistance right up about 315, 318 area in that March contract. We're going to see some interesting volatility today because that options expiration. I think this rally is ultimately something to sell into. There's a little bit of a weather scare, but I think that's more headline. I think ultimately too, there may have been some short positions earlier in the week in that February contract that had to get out, because if you look at the timing of that rally in February, it was right after the 1:30 p.m. Central Time settlement. So when the market settles, if someone has to meet margin, I mean, even if the price retreats later in the day, it's marked against that margin from that settlement. So I think somebody had to get blown out of a short position, and that exacerbated this move. I think the March contract is ready to retreat. I need to see it close below 305, 306 area in order to get the ball rolling down to about 290.
Bill, how much seasonality plays into this? Because when you look, natural gas obviously has had a significant run here in January because we've been so cold. When we start warming up, does that play into this? Will traders start taking profits when we actually start turning into spring?
Well, that's the interesting thing right now, in the sense that, January, we've seen tremendous drawdowns. We saw a record drawdown earlier in the month. Yesterday's draw of 288 would have been basically a record if it wasn't for that one earlier in the month. So we're seeing some cold weather. There's fear of that polar vortex. I think in February, that's more of just some headlines right now. I don't think we're necessarily going to see what we saw early in January again in February. But as that February contract comes off, that's where we get this March contract, which has tremendous open interest. And everybody really focuses on the spreads, February, March, April. And those spreads are an interesting way to also look at the market too. If we do get a very big cold scare in February, the March can really rip. And that's where people, the term the widowmaker is a classic term with that March-April spread.
Bill, give us your thoughts here on gold. I've got the GLD up on the screen. Thoughts on the gold market and gold futures?
I love gold. We've been extremely bullish since the December Fed meeting, right into that. I mean, I look at the commitment of traders. The commitment of traders is something that's extremely important to me. And in December, we saw basically a 20-to-1 long to short position in gold. And that's what really opened the door for the extreme selling. We based over the last month extremely well. And we've seen a rally of almost $150. And I think though I am long-term bullish, I think it's extended to the top. This is more of a ceiling area. And that commitment of traders is bigger than the 20-to-1 it was in December. At 1364 yesterday, we started to fall back. The dollar is I think, a little oversold too. I would love to see a pullback in gold somewhere near 1335, potentially just a little bit lower, to rebuild a long position. I think the next rally is the one that's going to break out above 1400. And I think 1500 really is in the cards August or September of this year.
Bill, before we let you go, we got to ask you about the digital gold here. And I don't think it's totally coincidental that gold has been strong in the last few weeks, while the digital gold of Bitcoin and the cryptocurrencies has been weak. What are your thoughts here as Bitcoin has pulled back significantly from the highs we just saw a month ago? And are you playing any of these Bitcoin futures? Well,
I think when the Bitcoin futures came in, we've definitely seen a lot of volatility kind of shrink out of that market. But on the flip side of the coin, was there a lot of volatility leading up to it because of it? I think there's a lot of value near term in Bitcoin, that 9,000 to 10,000 area. Overall, the digital currencies, I mean, there's good trading opportunities. The charts get very, very technical for Bitcoin futures. Am I a long-term believer in Bitcoin? I think there's better technology out there. Personally, I'm invested in some other technologies that I think that have. I like this stuff a lot, and I think there's some really interesting stuff off the blockchain that people should look to get their own research on, feel comfortable with, because I think that's here to stay.
All right, we've been on the line with Bill Baruch. Blue Line Futures is the name of his firm. Bill, thank you so much for joining us today, and have a good one.
Thank you very much.
All right. And balance it.
8:30 now. Dennis, can we get some quick imbalances from you?
Let's go take a look. Hot off the press. I haven't looked myself yet. Bringing it up here on my screen. I always like to bring up the General Electric one first, and it's 120,000 to sell, so pretty small this morning. Those imbalances are getting smaller in GE as we move further and further away from their disappointing news last week. Alibaba, which is just a monster stock, and I'm telling you, it just seems like every day I come in, it's like clockwork. Alibaba, 4 out of 5 days is trading higher. It is higher here again, $3 up in the pre-market. There is 99,000 shares to buy in Alibaba, so that stock is very strong here once again. And also, like clockwork, the last 3 days, we have a big sell imbalance in Goldman Sachs. GS trading down in the pre-market here now, 61 cents. And if you look since 8:30, it just fell. And people saying, what's going on with Goldman Sachs? I'll tell you what's going on. 96,000 shares to sell. That is very significant for a $268 stock. There is some institution that has been selling about 100,000 shares every single morning for 3 mornings now. So that is a trend. We'll keep an eye on that one on GS. Twitter, 52,000 to buy. That's significant here. What about the Twitter chart? We haven't looked at that one for a while. It's consolidating nicely right around this little $22 area, Joel. 22.04, 22.10. Are you getting interested?
I am.
I kind of am too.
This news. I mean, I want to check the earnings date and see. I mean, you had Noto leaving, that knocked it down. Now you're hanging out in the lower 22s. So. Let's have that hold in today's session. If not, you're looking into the 21 handle, and there's another pair. Actually, there's another triple bottom at 21.52 to 21.63. So we'll see how it holds up in today's session. Also check, the earnings to see maybe it has a little pre-earnings run. But I know Sean's looking for a good quarter, and he was really was not bothered by Noto leaving. So we'll see what happens with Twitter.
2 more minutes. Let's jump back to the earnings parade here, get a couple more stocks in because there was a lot of them to cover here. One stock that was really, really wild last night was Western Digital. And it seems like Western Digital gets killed. It's always choppy after these earnings reports. Anyways, initial report gets the beats. They come out on the conference call and increase their guidance, and then the stock bounces all the way back. Spencer, give us the details and those numbers for WDC.
WDC Q2 EPS $3.95 versus $3.79. Sales of $5.3 billion, which was the estimate. On the conference call, they gave some guidance. Q3 adjusted EPS of $3.20 to $3.30. The estimate was down to $3.04. So very good Q2 EPS guidance, and the Q2 earnings numbers, EPS beat, sales meet.
Stock goes all the way down into the 83 handle and sat there until that conference call guidance. And when they upped the guidance, the stock took off, and now we're actually trading in the green. So we know guidance matters more than the actual earnings in almost every case. And here you are, Western Digital holds that guidance for the conference call, comes out with it, and pops the stock. It's almost like it's like in their back pocket. Hey, our stocks, we're going to keep this guidance back because if they're going to hit us on these numbers a little bit, the guidance will help us later on.
Major volume traded down there. Actually, I got an 82.15 low, and now you got
82 handle. I didn't notice that one.
Yeah, trading at 88. Full disclosure, I still got this one in one of my portfolios.
You're like Warren Buffett over there.
Oh yeah, Warren Buffett.
You hold. How many years have you had that Western Digital?
You're Warren Buffett.
You hold a long time, Joel. Joel bought the bottom on this one. He buys the bottom sometimes.
Yeah, and I sell.
It's hard to do.
I sell the bottom too.
I'm good at that too.
Anyways, you're trading out in the pre-market session. Got a bogey here at pre-market high is 89. High from yesterday was 89.84. Challenging the $90 level, trading up a penny at 88 even. Really would like to see it. I think shorts might just be headed for the hills if you could clear that, because you got a gap to fill all the way up to 92.25. So still $2 away from yesterday's high. Been in a real trading range, really. And I mean, it did had the bumps up to 92.93, but 90 to 93, I'm not going to sell it on strength. I didn't sell it on weakness down here. 80 was my bogey, but sure like to get some sustained closes over $90.
All right, 8:35, we're going to grab our second guest of the day, the Reverend Emmanuel Lemelson. We'll be right back with the Reverend. Welcome back, everyone. This has been Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick, and we're on with the Reverend Emmanuel Lemelson. Reverend, how's it going today?
Glory be to God. It's a great day here in Stowe, Vermont. The sun is shining, a little cold, but great day.
Yeah. Why are you in Stowe, Vermont?
You know, I'm building a Greek Orthodox church up here, actually, and it's the first one to be built in Vermont, so I'm down on the job site.
I hope you're not trading while you're doing
that. No trading.
All right, Reverend, we were working out the kinks in the video, and we had you on there for a second. For sure, we're going to get you on next time. This is our first week doing it, but I wanted to check in with you here, and I just wanted to share with you a conversation that I had last week with one of our devoted listeners, and she was asking about her favorite, and I said, what's your favorite guest? and your name came up first. And she goes, and who's the, the Reverend? Reverend Lemelson. I'm like, well, what do you like about him? And she liked Hibbert Sporting Goods, and you came on the show. I don't know how you do this. Sometimes you come on the show, and these are things are just trading at the rock bottom. And you picked that one up, and so did she, and she's happy. Now the stock has got over $25. Are you out redeploying your assets somewhere, holding on to a little bit? Tell us about your exit in Hibbert Sports.
Well, Joel, I paid her $20 to say that, right?
No. You don't even know who she is. That would not be scrupulous.
Well, yeah. Well, Joel, it worked out well. I mean, Hibbert Sports is just one of those rare situations where it's a misunderstood company. You've got the whole financial media and the pundits acting against the company with what was, in my opinion, a rational assessment of their future. You're talking about a company with really long operating history, never had a loss, aggressive buyback program, really smart and dynamic management team, trading at, a fraction of its real worth. There's not a whole lot of risk in allocating capital to a name like that. So, I went down and visited the company, met with the CEO and the CFO, and I was completely impressed by the operation they're running. I just thought, let's just keep buying as much as we can. And we did that. And it worked out well. Yeah, glory be to God. We even got a lot of shares at like rock bottom when it sold off on their earnings report back in August.
Still holding?
So, no, we liquidated that position, not because we think it's overvalued, but we wanted to free up additional liquidity in the portfolio. So, I think it's anything under $30 is still a great value in my opinion for Hibbert.
All right,
at the same time, we also invested in Dick's. Dick's also a great company that was selling at a big discount. The thesis there was that, it was this inventory glut. I didn't think it was a secular problem. It was really an industry-wide issue. It was going to resolve itself, and it's already resolving itself.
All right, that one's had a nice move from under 25, got up back over 35. Let's turn to the hot commodity here, crude oil and natural gas. And boy, the numbers have been supporting, big draws, crude, kind of the untold story of the year. Got up over $66, back in the 65 handle, trading at 65.68 today, up 17 cents here. What do you see behind the oil rally, and will it continue?
Yeah, sure, Joel. Well, we've been talking about oil and gas for a long time because, as we have this large investment in geospace technologies, which has not performed well. And it looks like we're wrong. I don't think we're wrong, but it looks that way in the near term. But I think the macro picture there is that, again, you have the financial media and pundits really off target on a lot of things, like, really focusing, for example, on shale output. That's probably going to account for maybe 7 or 8% at most of global production. And then when you take $1 trillion out of CapEx over the last 3 or 4 years, we lived through one of the great depressions in oil and gas history. That's where you're going to find value. I mean, I think if you go back a year or two and you looked at the financial media, you would think everyone's going to be driving a Tesla Model 3 next year and have a windmill in their backyard and oil would collapse and whatever oil was needed would come from shale. There's just no numbers that support that. Global consumption is probably going to reach 100 million barrels a day this year. Venezuela, I don't know how they recover their output. They're down to 1.6 million barrels, according to their own figures. For December, that's 1.6 million barrels a day. That's going to continue to collapse. I mean, they've been underinvested for 20 years. And nobody's going to go in there. Halliburton, Schlumberger, no one's going to go in there and fix their production problems. So, and I think estimates for the shale reservoirs are probably exaggerated as well. So I'm in the camp that believes there's going to be a deficit, or that we may already be in a deficit situation. And I just think that math, you can't change it. I mean, even if markets pulled back, I'd like to believe that investments in oil and gas are not going to be correlated to the broader indexes.
All right. So, time to time you come on the show and you say that, this is an investment that you would put your grandmother into. And my grandmothers are deceased, but I put my mother-in-law on this one in GEOS, and she's yelling at me every time I come over there. Yeah. What's going on with this thing? I mean, it's barely off the mat. Yeah. Huge, poor relative performance here. I don't know if you're trying to wiggle out of your position at 15 because I see like a quad top there. But, what do you do when, it's got to be very frustrating with the move and these other components of oil. What's going on with GEOS?
Yeah, well, first of all, tell her to call me and yell at me, not you.
Okay.
But you know, as the saying goes, patience is a virtue. I mean, great fortunes are not made typically by quick transactions. And we've said from the beginning there was a multi-year commitment for us. I'll hold it indefinitely, Frank. It's a special situation. It's not the type of value investment that a Ben Graham and probably not even Warren Buffett would invest in. But the big thing with Geospace is that the accounting is broadly misunderstood. So people look at that company and go, oh, geez, they lost $50 million in the last year, but that's not accurate. So they're writing down their inventory extremely aggressively, but this is not inventory that's going to a dumpster. So in my appraisal, there's probably $75 to $100 million in assets in that company that are not on the balance sheet. They're going to sell this inventory later on at great profits. They've got near record cash and liquidity. They've got no debt. I mean, who came through the carnage of the oil and gas crisis the last 3 years with no debt and record liquidity? I don't know anybody except Geospace. They've also got leading technology. Now, seismic is really it's the marquee technology, right? If you want to poke holes in the ground and get oil out, you need to do seismic. It's a fact. But seismic is always the last to recover. Now, oil and gas is 60% since last summer. It's been an incredible run-up. I think it could easily go to $100 a barrel, especially if Venezuela collapses. The reserve replacement ratio of the oil majors is only 11%. So we're talking less than 1 in 6 barrels is being replaced versus what's being shipped. That's not sustainable. So they're going to have to do seismic studies. It's a fact. And when you look at the landscape, you know, CGG, not well situated. They filed for bankruptcy. You look at Ion Geophysical, by the way, massive debt and bond issuance issues, existential threats from legal issues, and yet their stock is up almost 700% in the last 5 months. I think it's just a matter of time for Geospace Technologies. Even if you look at PGS or TGS, I mean, clearly the recovery is underway. Their sales were up 45% year over year in their fiscal fourth quarter, which ended September 30th. Management's comments, if you know how to read that conference call transcript carefully, extremely bullish, the most bullish I've seen in probably 4 years. So patience is a virtue, Joel. I think when we're proven right on that, we look like we're wrong now, but when we're proven right, I think it's going to be in a huge sort of way. Keep in mind, in the last crisis in 2009 with oil and gas, from trough to peak, the company went up 25-fold in the following 2 years.
Hi, Reverend. Dennis Dick here. I just want to ask you about Apple because we've had a couple days where we've sold off significantly. We got up to this 180 level, tried to get through for a couple days, kind of got up above it, 180.10, and then we sold off 10 points since then. Seems like every time Apple pulls back, it's a buying opportunity. Is this one of those buying opportunities again, or is this something to be concerned about?
Yeah, I think if you're a long-term investor, it's hard to find a better company than Apple, for sure. I don't think you're going to get massive high returns at these prices, but it's a safe bet. It's probably with the best run company in the world. They pay a dividend. They've got a buyback. I mean, everything you'd want. Tim Cook is a brilliant CEO. I don't know how people get out of that ecosystem once you're in. I mean, I see no way out. I mean, I don't see how a disruptor could change the way they've got sort of their hands in our wallets, if you will, literally. And everyone likes it. I mean, everyone loves the company. It's a good investment. You can pay a fair price or even a premium for a great company. That's okay. You don't have to be value oriented. In my mind, Apple's as good as it gets from operational excellence standpoint and from the product that they're producing.
Any other additions or deletions from your portfolio?
Well, you know, we shorted Domino's last year. If you read our short thesis in our 2016 annual report, it's at lemelsoncapital.com. You don't have to register. You can just go there and read our annual reports. You know, I'm amazed it's $220 a share or something like that. We shorted it and we covered it initially at a loss. And then we shorted it again at a higher price at a profit. And now we have a small short stake and we're going to be increasing it again. But you really can't have a company that borrows. You're talking about, I think they have minus $65 in tangible book value now per share and something like $72 a share in debt. It's just ridiculous numbers. Basically borrowing to increase the shareholder deficit. By definition, that is not sustainable. I mean, these hot sort of buzzwords of asset light and all these other things. You know, CEO's departing. I think he's departing at the top because he realizes this thing's a house of cards balance sheet. We had a great interview with Activist Insight, their website. You might want to look up the interview talking about it, but that to me is a no-brainer short. So we'll be shorting that pretty aggressively this year.
And any thoughts on this overall market here, this relentless bull? I actually was looking up, and we haven't had back-to-back down days in the S&P 500 since the middle of December here. I know you've seen a lot of different markets, bull and bear markets here. Just your opinions on the overall trend here.
Well, Joel, I'm always very cautious, and I've been cautious for a long time. If you'd asked 2011 and 2012, I would have said, bet the farm on the stock market. But at this point, when everyone's jumping in, it's just classic late stage. I mean, the history of U.S. Financial markets, right, is cyclical. And you would have to believe that we're not going to have a down cycle at any time to buy in at these prices. There are areas where you can find value, like sports retail, like we did last fall. But frankly, the short side looks much better to me because you can almost see it right in the sentiment of the average retail investor when they really believe it's easy, right? It's just easy to make money. You put your money in, you get a return, and people stop caring about prices, right? I mean, there's no mention of, is there a price for Netflix which is too high? Nobody talks about that. I mean, is it a great company? Sure. Is it a great media? Sure. Is it a disruptor? Sure. Is Reed Hastings brilliant? Absolutely. But is there a price that's too high? Nobody talks about that because there is no price that's too high because tomorrow the price will be higher. And that's just the definition of speculation. And when price is completely divorced from value in the minds of the average investor, and then you start to see what, in my opinion, are symptomatic of a bubble, like things like frantic speculation and things like Bitcoin and cryptocurrencies. These are all indications that we've entered a phase that's not at all rational, and it could end at any time. It could be any sort of event, and there's just no margin of safety in most issues out there right now. It's really most issues are fully priced. Many issues are off the charts priced, and I don't think people are thinking about the price value dislocations at all. They just think no price is too high because tomorrow will be higher.
We've been on the
scary environment.
We've been on the line with Reverend Emmanuel Lemelson of Lemelson Capital Management and the Lantern Foundation. So what we're going to do is we're going to make sure that you're in your office, and we're going to get a webcam hooked up next time, and we're going to have you live on the show. Great input as always.
All right, guys.
No, we're looking forward to it. Thank you very much, Reverend. Go back to the construction there. Be careful with that hammer and saw. I don't want you getting hurt.
I love your show, guys. You guys are killing it. I mean, you're my favorite media broadcast in the morning. So keep up the great work, guys.
All right. Thank you.
Take care. Yeah. Bye-bye.
S&P futures trading up 9 1/4 here, 50.5, just off that high of 52 1/4. Bill mentioned he does his stars for his levels, Dennis. You remember when I used to do those in the office, and 4-star up there at 55 1/4. So we will keep an eye on that level. We opened up at this kind of the stratosphere yesterday, and we sold off hard, but been good volatility in the market. Let's see if we'll continue off the open. Let's get to some more earnings reports.
Jump over to the AbbVie report, ABBV. That stock is trading up 4 points here. Now 5 points in the pre-market, continues to climb. I do have this one in my investment portfolio, but one of my best stocks. Spencer, details on AbbVie.
Q4 adjusted EPS $1.48, which is a 4-cent beat. Sales of $7.739 billion versus $7.53 billion, so a beat on the sales number as well. Fiscal year EPS coming in. They're actually raising their fiscal year EPS by about $1, and they plan to make investments of $2.5 billion over the next 5 years in U.S. capital projects.
The book really doesn't have much in it either. You're at all-time highs, so I don't even know what to say. 150,000 shares have already traded. This thing can go anywhere.
Yeah, 113.58 high. Just made a high at 113.70. Blowing away the old. I guess the only thing I could give you is the former resistance to perhaps be new support. Street leading the right way on this one, rallied over $8 over the last couple weeks. Your all-time closing high from yesterday, 108.30 with a 108.37. So if you got to be quick for a gap fill, I don't even know if you're going to see it down at 108.50. But that's what you're looking at. And Dennis, you going to lighten up on this at all?
No, I'm sticking with it. I'm in this. I don't even know because I got it right from the IPO from Abbott Labs. So I'm in from the beginning of it. I think my cost basis is, well, you just go to the chart and look at where it was the first day of trading, I guess. But I can't remember, $32. So no, I'm sticking with it. Biotech's hot here right now. I'm sticking with AbbVie. I have Abbott and I have Abbott still and AbbVie, and both the stocks have been unbelievable.
All right, let's move on here. Any other super winners?
Honeywell. We didn't cover the Honeywell report, so let's do that one, and then we're going to jump into some ratings here for the last few minutes. HON, Spencer, how'd they do?
Honeywell reported Q4 adjusted EPS $1.85. That's beat by a penny. Sales of $10.843 versus $10.75 billion. So they beat on the sales number as well. They're also raising their fiscal year EPS by about 20 cents.
How many charts look the same, Joel? Like just straight up, trending straight up, different sectors. It doesn't matter what it is, just goes up. I mean, this is just such a broad-based rally. So many rallies are built by one or two sectors. This rally is built by everything. I mean, we just look at the biotechs. A lot of them have come back to new highs. We're looking at Honeywell. There's so many different stock charts that we've looked at today. They all look the same. I mean, they all just keep going straight up. It's such a broad-based rally. I mean, it's so hard to fight the tape.
Went out on the high tick yesterday at 161.84. All-time high right there, 61.89. So you're not too far away from a gap fill here in Honeywell. And if you look at the 15-minute chart, someone got real excited here. Got up to 168.40, right, at your pre-market high.
Really?
Yeah, that's what I got.
168. How much volume traded up there? I never saw that. What time was that?
That wasn't much. It wasn't much. Scratch that from
that right off the number?
Yeah, 117.
Somebody just got really excited.
They painted the tape. So where you'd have some more volume trading. I mean, I guess 163.96, that would validate at least 7,000 shares traded on this one. And how happy do you think Honeywell is that they weren't taken over by GE?
Oh, I know. Well, think about that merger back in 2001 when GE was going to buy out Honeywell and then antitrust broke it down. I mean, those two companies have went in the exact opposite direction since then. It's amazing as to, what has happened to GE. And like I said, I sold half of my position finally in the GE. I'm glad I did. I sold it right up there at 16.9. It's been 2 days. So it looked ugly there right after the report. When it got up to 17.5, I was like, yeah, it's rallying. But, within literally that morning, I think before it even opened, it was giving it back. I mean, the stock has just got so many issues with it. It's so hard to come in here and say, okay, well, this is the bottom in GE, because everybody's been trying to call the bottom in GE for the last year, and it just keeps getting worse. And how would you get a better environment? I mean, everybody's blowing it out of the water. What are they doing there?
I don't know.
You gotta fire some people, no?
Well, they already did that. They already
had to do more.
They already had to change it.
Fire the new guy too. He's not doing any better. Maybe it takes time, but anyways, I'm glad. I wish I was sold it all. I wish I was sold it all at the end of the year, taking the tax loss. I was really going to do, and then it rallied. At the beginning of the year, I was like, oh, maybe it's coming back. I mean, just such an underperformer. Had in my portfolio for 18 years. Bought it $30 back in the year 2000. It's at 16 here today. Sure, I got a lot of dividends off of it, which is an argument. I do not drip my portfolio. And some people, Kramer often argues, you got to have dividend reinvestment programs. You know what? I'm still, if you're in the right stocks, the dividend reinvestment program's great. But if you're in the, and maybe you shouldn't be in the wrong stocks, but sometimes it just things don't work out. In the case of GE, by not dripping my portfolio, which is a dividend reinvestment program, I've actually taken out, in those 18 years, more money than I put into it in dividends. If I was reinvesting all those dividends, I would be really down significantly on that GE position, and I'm not, because all the dividends I took out of it. So I don't know. I guess, if you have, excellent stock picking ability and you're always right, maybe that's the argument, or you're always going to sell when the company's fundamentals start to turn. But I'm long-term. I like to hold through some of the down, turns as well. I went through, a lot of down spells here, especially during the financial crisis. I mean, so many people, really, screwed up during the financial crisis and sold, at the bottom. You talk to a lot of different people and they don't ever want to touch the stock market again, because, and people who are new to the market don't know how bad it was. It's 10 years ago now we're removed from the financial crisis. But, when you look at the charts and you look at stocks, and it wasn't just bank stocks, it was every stock. Like, think about the stock of Caterpillar. You think, what an awesome company. In the financial crisis, if you go back, and my chart doesn't go back, what was the low in the financial crisis, Joel, for Caterpillar?
$23.50.
$23. And I was after it printed at 80. So, I mean, the one thing is, things happen, and we will eventually get these downturns. Will we ever see something like the financial crisis again, where everything got murdered? I don't know. It'll probably be an event eventually that's going to knock the stock market down significantly here. But right now, that is so far beyond everybody's comprehension here. All there is now is just the people who sold in the last 7 or 8 years, or even at the bottom there, scrambling to try to get back into this market. And they can't. Every time it pulls back 1% or 2%, they come in and they start buying stocks again. It's so many institutional managers that are underinvested as well. People who have been trying to call the top all the way up, and it's been the wrong move. And just sticking with it has been the right move. And, I'm glad from that perspective that I held through the financial crisis, because I had a lot of money in stocks. I've been trading for a lot of years and I'd accumulated some wealth, and I put that money into stocks. And during the financial crisis, I challenged long-term investing altogether in my head. And I was like, man, I've got this Warren Buffett approach, hold through the long term. I've got 100 companies in my portfolio, and I watched my stock investment portfolio, which was somewhat conservative, fall, I think, over 40% in that crisis. And obviously the markets fell, almost 70%. So, I did well, but still, when you watch your wealth fall by 40%, you think, wow, does this long-term investing stuff really work? But anyways, I bought a few more stocks back then, and that was the best move I could have possibly did, because, I bought MasterCard back there during the financial crisis, or just slightly afterwards. And I bought a bunch of others. And some of these things I'm up like 1,000% on. HRS was another one that I bought too during the financial crisis, Harris Corp. I bought that thing at like $25 or something. It's 144 today. So yeah, you know what? Maybe long-term investing really does work, but there is going to be times where it is tough to hold through. So, here's one of those times, and this is a tangent I took you on, one of those times in GE where, I've actually, challenged it, where I don't know if this company can turn it around. And I've stuck with it for a long time. And that's why I sold half, because I feel like I'll be happy either way then. If it does turn it around, well, at least I held on to half. And if it doesn't turn it around and it goes down, well, at least I sold half. And it's a lighter position. It gets lighter for me every day as it continues to go down. But sometimes, you just got it. You can hold for the long term, but if you're in the wrong companies, and when you own 100 stocks, and like I have 100 stocks in my investment portfolio, there is zero chance you're going to be right on all of them. Zero chance. So, can you lighten up the bad ones? Yeah. But sometimes when you lighten up the bad ones, it's right at the bottom. So I've always just kind of tried to hold through all of that, continue to add, as I continue to add wealth, I add more stocks, or I add to my existing positions. And, sometimes I do indexes as well, but it's been the right move overall. And, when now I look at my investment portfolio, and I got 100 stocks in there, and it's very correlated with the overall market. I'm just not paying management fees. So I'm passively, skipping the management fees. And, when the S&Ps are down, my portfolio's down. When the S&Ps are up, my portfolio's up. So despite having a couple, dogs in there, everybody's got a dog in their portfolio when you got that many stocks.
All right, Spencer, you want to wrap things up?
Well, we didn't do any ratings, and there was really only one rating I wanted to hit on today, and that was Whirlpool, because you don't often see an upgrade and downgrade in the same stock on the same day. At least I don't. Whirlpool upgraded this morning to outperform at Raymond James and downgraded to neutral or sector weight, whatever, at KeyBank. So who's winning this morning, Joel?
We are just trading down 9 cents. So really no one is winning here. 183. Big move up, yet 2-day rally. I just don't want to see it below 179.02 because you got a big drop. Don't think you're going to see yesterday's high. Just see what happens unchanged, and you'll see who's the winner, bull and the bear in this one. Just a big pop off the low. Don't want to see it take out Thursday's low.
Anything else on your radar, Dennis, as far as ratings go?
Let's just go over, and we're going a little over time here for you today, but we'll just go through themes. I like to look at my screen. I like to look at, exactly what sectors I see driving in here today. It's a tech rally. I mean, really, when you look at it overall here, the Qs are up significantly more than the S&P's 0.62% versus 1.08%, but it's driven by Intel, and all your chips are very strong here as well. I mean, Intel's 48, 49. So we are seeing a tech rally here this morning. I am seeing, some of the other sectors not really following. Some of the consumer discretionary stuff is trading down. Colgate reported, and they're actually getting the beats here this morning, which is not totally surprising because Procter & Gamble disappointed as well. You can always take tells from other companies. PG, okay report, but they hit the stock. CL, we didn't even get to the numbers for that one. Colgate, but it's down $3 in the pre-market, so assuming they didn't do that great. Other themes here, I'm looking, the banks here are kind of mixed, actually. TLT is flat, well, 22 cents down, basically flat. You often think, the banks are going to have a rally here, but that Goldman Sachs selling balance is really weighing. I think overall on all the banks here, because you get pairs traders that don't even sell their banks against the Goldman, buying that in the pre-market. But GS now down $1.30, and that is because 136,000 to sell. That is significant from a selling balance perspective. But the other banks, like Wells, is just kind of hanging out here flat. Bank of America's up 6 cents, not really participating here. So lack of participation, at least this morning, from the financials. Jumping over here just to a few other sectors. Obviously, we got gold, which has been on a pretty good monster run here up until yesterday when there came in some profit taking. Some of those stocks are mixed here this morning, a little bit trading higher. Some of the retail stocks are a little bit higher, but you know what? As strong as we are here this morning, it's really being driven by tech.
All right. Take two, Spencer.
Take two. It's okay. We went a little over. It's okay. Not a problem. It's a Friday. We can do whatever we want on a Friday. So that's it for our show, though. Hope you enjoyed our guests, Bill, Baruch, and the Reverend Emmanuel Lemelson. If you want to hear their interviews again or any part of our show, the podcast is on iTunes, SoundCloud, and Stitcher, or you go to youtube.com/BenzingaTV. You can rewatch the show with the charts as they aired live there. Hope you all have had a good morning so far and had a good week. Hope you have a good rest of your day and a good weekend. Hope you join us again on Monday's show. Have a good one, everyone.